ADP, or Automatic Data Processing, is a company focusing on payroll processing across all levels of companies. Since 1985, it has had a yearly revenue of at least $1 billion and has paid out dividends for the last 49 consecutive years. It is a piece of my dividend portfolio, and today I wanted to break down why I believe it is a great choice for my personal plan to develop an income machine heading into retirement. This isn't personal investment advice. This is just the dividend guy. And let's get into the video. Founded in 1949, ADP provides payroll processing, talent management, benefits administration, and time tracking services to companies of all sizes. It's like the invisible hand behind millions of paychecks, ensuring that everything from payroll to compliance happens without a hitch. In 2023, ADP pulled in an impressive $19.2 billion in revenue. And with its steady focus on essential services, the company has consistently turned solid profits year after year. Investors with a soft spot for dividend stocks know that ADP is a rare gem. Why? For starters, it's been growing its dividend for 50 years straight. That's half a century of cash back in shareholders' pockets. As of November 2024, ADP's dividend yield stands at a modest 1.84, reflecting its premium stock price, which is a nod to the company's strength and stability. Sure, you may pay a little extra per share, but you're investing in a juggernaut with a reputation for delivering reliable income. ADP's dividend growth is no small feat either. Over the past 5 years, the company's dividend has grown at an average compound annual growth rate of nearly 12%. This means that ADP isn't just paying dividends, it's growing them at a pace that outstrips inflation and rewards loyal shareholders. So while the yield might seem conservative, ADP has a habit of steadily increasing its payout, which keeps the value flowing over time. 2024 has been another solid year for ADP. The company reported fourth quarter revenues of $4.77 billion, slightly above expectations, driven by steady demand for its suite of HR and payroll services. With its focus on cloud-based solutions and expanding analytics capabilities, ADP continues to modernize, ensuring it's not just keeping up but leading in the HR tech space. And as more businesses open up and expand, the demand for payroll and HR services rises, solidifying ADP's position in the market. For dividend-focused investors, ADP offers a compelling case. It has the reliable income you want from a dividend stock, backed by a business model that thrives even in economic downturns. It's like the anchor in your dividend portfolio, providing stability, consistency, and potential for growth. Plus, with ADP's long history of paying and growing dividends, you're not just buying a stock, you're buying a legacy of dependability. So, if you're building a dividend portfolio with an eye for quality, ADP is a worthy contender, delivering both resilience and rewarding returns. ADP isn't just coasting along while AI changes the world. It's cleverly positioning itself to grow alongside these new technologies. While other companies might feel the pressure to compete with automation, ADP has built a service so integral to business operations that it's practically immune. Payroll, HR compliance, and benefits administration are no simple tasks to automate. They're steeped in regulation, local laws, and the kind of complex, personalized work that requires a human touch. And rather than trying to outdo AI, ADP has harnessed it within their services, integrating smart automation and data insights to help their clients manage workforces more effectively. Instead of being replaced by AI, ADP is using it as a booster, improving their offerings without compromising their core value. And let's talk about demand. As the economy grows and more businesses open up, payroll and HR services like those ADP provides are simply indispensable. No matter how lean or tech-forward a company aims to be, it still needs to run payroll, comply with labor laws, and keep track of its employees. This puts ADP in the sweet spot. Their services are necessary, adaptable, and ready to scale alongside the economy. ADP isn't just relying on the same old model either. They've been busy enhancing their cloud-based solutions and analytics capabilities. Products like ADP Workforce Now, Next-Gen HCM, and ADP Data Cloud are designed to meet the needs of businesses of every size, adding flexibility and deep data insights that help companies make strategic HR decisions. This focus on cloud and data-driven services doesn't just make ADP more attractive to clients, it also creates dependable recurring revenue streams. So ADP isn't just doing business as usual. They're keeping things fresh, innovating in ways that add value for clients and shareholders alike. Then there's the stability at the top. Carlos Rodriguez, ADP's current CEO, has led the company with a steady hand, ensuring that it remains focused on long-term growth and client satisfaction. With a solid, experienced leadership team in place, ADP has a sense of stability that's reflected in its performance and market positioning. This kind of consistent, focused leadership is a major asset in a world where executive turnover can often lead to turbulence. ADP's competitive moat is wide too. It has a massive footprint in the HR services market, backed by decades of expertise and a brand that's practically synonymous with payroll and HR. ADP's technology investments, global reach, and strong customer relationships make it extremely difficult for new entrants or smaller competitors to match its scale or reputation. For clients, switching from ADP is no small task. Its comprehensive services and integrations become deeply embedded in a business's daily operations. This all adds up to a moat that protects ADP from competitors and gives investors confidence in its stability. With Trump back in the spotlight, the idea is that his policies might lean toward fostering a more business-friendly environment. In theory, this means fewer regulations and lower taxes, especially aimed at helping small businesses get off the ground or grow. More small businesses popping up, that's music to ADP's ears. After all, every new business that opens its doors needs a way to pay its people, manage benefits, and stay on the right side of labor laws. All things ADP excels at. If Trump's policies really do spur small business growth, ADP stands to benefit directly, adding more clients to its payroll roster and expanding its reach even further. But here's the real secret to ADP's staying power. It's the business equivalent of a set it and forget it solution. Once a company signs up for ADP's services, they're usually in it for the long haul. Why? Because switching payroll and HR providers isn't exactly an easy or fun process. Nobody's excited to tell investors, oh, by the way, we're changing our entire payroll system. And as long as ADP is doing its job, handling payroll, managing compliance, keeping the company out of hot water, there's simply no reason for most businesses to look elsewhere. This resistance to change means that ADP isn't fighting tooth and nail to hold on to clients. As long as they're reliable, which they've proven to be over decades, most companies are content to stick around. It's an area where stability and reliability are prized over novelty, and ADP plays that role perfectly. The result? A DP doesn't just gain clients, they keep them, and this creates a steady, predictable revenue stream that's ideal for dividend-focused investors. I've got a personal stake in ADP, though it's a relatively modest one at $1,250. Still, over the past year, it's shown some serious strength, growing by about 24%. My yield on cost, thanks to that appreciation and steady dividend growth, has ticked up past 2.2, which is one of those small but satisfying milestones. ADP is one of those investments where, while the initial yield might not knock your socks off, the steady appreciation and strong dividend growth rate can really push that number up over time. Looking ahead, I'm planning to add more ADP to my portfolio and make it one of my core positions. It's not the flashiest stock, but that's actually part of the appeal. ADP has the stability, the growth potential, and the reliability that make it a perfect backbone for a long-term dividend-focused strategy. There might be more exciting stocks out there, but for a portfolio that values consistency and growth over time, ADP is about as solid as it gets. But it isn't all positives. There are a few things that do concern me. Some of these I already sort of addressed because, in my opinion, they're not all fatal flaws. A few headwinds could potentially slow down the company's growth trajectory. For starters, one key challenge lies in rising competition. Although ADP has a strong moat and client retention is high, newer companies are entering the HR tech space with innovative, niche products that cater to specific client needs. Companies like Paycom, Workday, and smaller specialized firms are finding ways to appeal to younger, tech-savvy businesses. While ADP has the advantage of scale, it has to continually invest in innovation to fend off these emerging players. Another hurdle could be changes in regulatory environments. While ADP benefits from its understanding of complex labor and tax laws, any major regulatory overhaul could force them to quickly adjust their services. Although ADP has managed these shifts well in the past, sudden or widespread regulatory changes could bring short-term costs and logistical headaches. Economic downturns are also a concern. A dip in the economy can impact the number of new clients ADP attracts, especially if businesses reduce headcount or close their doors. Since ADP charges based on payroll size for many of its services, mass layoffs or slowdowns in hiring could chip away at revenue growth. Additionally, the much anticipated growth from small businesses could stall in a high interest rate environment or with a tighter lending market. Lastly, technology itself is a double-edged sword for ADP. While the company has invested in its own tech to remain competitive, there's a chance that future advancements in AI or automation could pressure them to continually adapt. Although ADP's services require a level of customization and human oversight, a rapid evolution of AI in HR tech might eventually influence client expectations or erode parts of ADP's business model. In my personal analysis, ADP stands out as a cornerstone for my dividend portfolio because it balances stability with growth potential in a way few companies can. At its core, ADP is all about providing essential services, payroll, HR compliance, and benefits management that businesses need regardless of economic cycles. This makes it resilient to downturns and shifts in market trends. With an already proven track record and an ability to adapt, ADP's reliability is a key factor for me, especially when I'm thinking about long-term investments that I want to set and forget. Ultimately, I choose to include ADP in my dividend portfolio because it's a rock-solid, growth-oriented investment in a sector that's always in demand. It may not be the most exciting stock out there, but that's part of the appeal. It's a dependable, resilient performer I can count on. As I look to build out my portfolio with core holdings, ADP's combination of stability, growth, and consistent dividends make it an ideal choice for me personally. If you enjoyed this video, I would appreciate you taking a second to press the like button and let me know what you thought in the comment section down below. I am planning to post a video like this at least once a week, analyzing a company I own, or an update of my $116,000 dividend portfolio.